Just confirm if we are live now. Are we live now? Just confirm. Let me know when we are live now. I think we are live now. Just confirm. Session 2. Yes, we are live now. So yes, friends, indeed, a warm welcome to one and all. How are you all doing, friends? Very good morning, and we are back with our session number 2 of sum solving. So yes, I hope you have enjoyed session number 1. In session number 1, we did about 9 questions. Yes, we did about 9 questions. Okay, few of them were from scope of supply, then few of them were from time of supply. Yes, so some questions of scope of supply, time of supply. I hope you have followed that. And friends, before going ahead, I would request you to subscribe to the channel and hit the bell icon so that you don't miss out on any of the important videos. And you know this, most of this batch will be live on YouTube. So go ahead and enjoy this batch, make most out of it. So let us start with today's session. So yesterday we did question number 145 of scope of supply, and we did time of supply. This 6 questions. So total about 9 questions we have done. So friends, today's agenda is 18 questions. Yes, today we are going to do 18 questions. They will be ranging from scope of supply as well as reverse charge mechanism. So I hope you all are ready for today's session. Yes. Let's start. Scope of supply. So I have written 512 in front of the questions that we are going to solve today. So ready all of you? Yes. And do you remember that detailed presentation also we did yesterday of a few questions of time of supply? Yes. So see, first question for the day. And yes, you might have doubt that, sir, from where to get these notes. So for that, you will have to download our app. Check the description to this video. You will get the details of the app. Okay. So go ahead and download CA Pratik Neve's ZEST Learning app. You will get notes in that. Okay. As well as few sessions will be on the YouTube. The remaining sessions will be on the app. So Tech Power Solutions Private Limited, registered supplier, specializes in providing maintenance and repair service for large industrial power plants, okay, which are categorized as immovable property. So this Tech Power Solutions Private Limited, they are giving supply of repair and maintenance to large industrial power plants, okay, which are categorized as immovable property and are spread across various locations in India. Company operates with its head office in Hyderabad. So this company, this supplier has head office where this supplier has head office in Hyderabad and has branches in multiple states. Company carries out repair and maintenance work in following manner. Okay, in what manner company carries out repairs and maintenance work? Self-contained mobile workshops are deployed for repair tasks. These workshops are container trucks equipped with repair tools, consumables, spare parts, and other necessary equipment to manage a wide range of repair operations. So they have self-contained mobile workshops. Okay. The mobile workshop truck is dispatched to client's location for executing the required repair work. Based on the repair requirements, tools, consumables, spare parts, and equipment are utilized from inventory which is stocked, that is kept in the truck. In some case, a standalone machine is also transported to client site for conducting specific repair service. Upon completion of repair work, customer is billed on the actual work performed and the exact quantity of consumables and spare parts used in the process. Occasionally, the mobile workshop truck is first sent to company's own branch located in another state before being deployed to client location for further repair service. So this is how the business model is. You have to determine GST liability, that is C and S GST or IGST, as applicable for this Tech Power Solutions Private Limited, Hyderabad, based on the provided details and the given data for the month of November. First one, invoices raised for repair work. Repair work is carried out in Andhra Pradesh. So yes, so for this place of supply will be Andhra Pradesh. You know, location of supplier is Hyderabad, Telangana. Place of supply is Andhra Pradesh. So there will be IGST. Okay. Now invoice for repair work carried out in Hyderabad itself. So there will be CGST plus SGST. In first case, there is IGST. And then truck sent to own locations in Andhra Pradesh. Value of items contained in the truck. So you know, own location in Andhra Pradesh, the truck is sent. Okay, so what happens? This is an interstate supply. To your own branch, you are sending the truck. So you know, this is an inter-branch transfer and the branch is located in another state. So it is having a different GST number. So this is also regarded as supply. So yes, this is also regarded as supply. So there will be GST on this also. There will be IGST on this because this is in another state. Value of truck, this will not be taxable. Truck is being sent, on that truck, you know, the goods were loaded. So this goods is going to be supply, but not the value of the truck, of course. Assume the rates to be taxed as under. Okay, let's see. So let's see the solution for this. Let's, you know, see how presentation is to be done for this. So what I'm doing, I'm opening our solutions. Yeah. So see, I hope it is visible to all of you. Repair work, as we discussed, carried out in Andhra Pradesh. The supplier is of Hyderabad, Telangana. So this is interstate supply. So it will be chargeable to IGST at 18%. Make sense? Next, repair work carried out in Hyderabad. This is intrastate supply. This is chargeable to CGST plus SGST. So on 1 crore 20 lakh at 18%. Can you see the rate of GST for works contract for repair and maintenance of immovable property? It was what? It was 18% IGST and 99% CGST and SGST. Okay. And value of items contained in the truck sent to own locations at at Andhra Pradesh. So location of supply Hyderabad, place of supply Andhra Pradesh. So again it is interstate supply. So it is chargeable to what? It is chargeable to IGST. And now you have to check, you know, the rate of GST of items used for repairs. that is the goods which are used for repairs, and the rate of GST for that given is 12%. So it will be at 12%. Okay. So repair services for the immovable property, it was 18%, and the goods which are supplied, it was 12%. So accordingly you have calculated the GSTs. And truck sent to own location in Andhra Pradesh, there is no GST because it is not treated as supply. Okay, so that's it. Here you get CGST as discussed 10 lakh 80,000, SGST 10 lakh 80,000, IGST 27 lakh 60,000. That's it. So I hope all of you understood this. Shall we go ahead to the next one? Yes, sir. Absolutely go ahead to the next one. Question number 3. Wonderful question. Glow Care Private Limited, registered company in the state of Chhattisgarh, specializes in manufacturing cosmetic products. Okay. The company has appointed Mr. Elegant from Pune, who is registered under GST in the state of Maharashtra, as a agent. Okay, so as an agent to facilitate sale of their products. So Glow Care Private Limited is going to send goods to whom? It is going to send goods to the Del Cred agent. Who is the Del Cred agent? Elegant. Mr. Elegant. So it is going to send goods to Mr. Elegant. Okay. So GPCL, I can say is principal. GPCL, I can say is principal, and Mr. is agent. Okay. So this supply between principal and agent is treated as supply under GST. So this will be supply, and then whatever sale is done by Mr. E, of course, this will also be treated as a supply. That's how I have to understand this transaction. As a Delcred agent, Mr. Elegant issues invoice in his own name from the sale of Glow Care Private Limited's products. Okay. So see, so this Mr. E is issuing invoice in his own name. So of course, here this will be treated as supply, as we discussed. Provides a guarantee for payment realization from customer to Glowcare Private Limited. To ensure the payment collection from customers, he means this agent offers short-term transaction-based loans and charges interest for the same. So you know what? This Mr. E is selling goods as well as giving some short loans. Okay. And charging interest. So even along with goods, that loans given will also be treated as supply. As a so transaction details, Elegant provides following details of transactions conducted during the month of March. Outward supplies, goods sold by Mr. E in his capacity as an agent in DCA capacity, intrastate transaction 12 lakh 80,000. So yes, this will be chargeable to GST. Interest earned from customers for the short-term credit facility, this will also be chargeable to GST, friends. So this 1280 plus 20, that is totally 13 lakh, is going to be chargeable to GST. Commission bill raised on Grow Care Private Limited for DCA services provided. So yes, this is a supply of service. This is a supply of service. Okay. Now, inward supply, interstate supply of goods received from Glow Care Private Limited, means this transaction. this transaction we are talking about. So this transaction is also treated as supply. Okay, now value under section 15, 12 lakh open market value. So in this case, for the inward supply, so we are calculating everything for Mr. E. He is our hero, Mr. E. So for this Mr. E, this supply from GCPL is what? Is an inward supply. For that inward supply, the assessable value will be 12 lakh rupees. Okay. On that 12 lakh, there shall be GST. Received training in marketing and distribution from Glow Care Private Limited under DC agreement free of cost. So, for services, there will be no problem. But for goods, it is a supply. As per schedule 1, this supply we are doing as per schedule 1, which para? Yes, absolutely, absolutely. Yes, so of course, CA final is always a mixture of CA inter also. So at CA in final, you have section 7 to section 52, which you did at CA inter as well. Getting my point? Yes, absolutely. So you are right. Mission CA 5811, whatever is your name, you're absolutely correct. There will be overlap of concepts at CA inter CA final. Okay, so now what happens? Goods is supply, but service is not supply. Yes, this is as per para 3 of schedule 1. Okay, now see. Okay, good. The company charges 85,500 for such training, so this is not a supply. Now, the applicable tax rate for both inward and outward supplies is as follows. CGST and SGST at 9% each for intrastate transactions and IGST 18% for interstate transactions. The amounts provided above are exclusive of taxes wherever applicable. It is assumed that all necessary conditions for availing ITC are met. What you have to do, you have to compute gross GST liability and eligible ITC for Mr. Elegant for the month of March. Let's do it, friends. Let us do it. So see, statement showing gross liability. First is goods sold by Mr. Elegant in his DCA capacity. As I discussed with you, including interest, because this interest, this supply of that loan is an integral part of selling the goods. So assessable value is 13 lakh. Why? 12 lakh 80,000 plus 20,000. And it is intrastate supply. It will be chargeable at what? 9% CGST, 9% SGST. It's given the rate of GST for these goods. Okay. See, it's given that applicable tax rate CGST, SGST at 9% each and IGST 18%. So yes, at on 13 lakhs, calculate at 9% each. You will get 1,17,000 CGST, 1,17,000 SGST. And now comes commission charged for DCA services. This commission charged for DCA services is a supply of services. Okay, and this is interstate supply because our principal is in different state. Okay, to whom we are charging this commission. So the 1,30,000 into 18%. Why 18%? It's given that the applicable tax rate for both inward and outward supplies is as follows. So even for supply of this agency services, the rate of GST is 18%. So calculate 1,30,000 into 18%, 23,400. So your overall output tax will become 1,17,000 CGST, 1,17,000 SGST, and 23,400 IGST. And now, when I talk about eligible ITC, it's going to be 12 lakh rupees. That is my value of inward supply. That is to the extent goods received from principal. So on that 12 lakh, GST will be at 18%, which is 2 lakh 16,000 because it is interstate supply. That's it. Nothing on services which are received from the principal. So that's it. 2 lakh 16,000 is total ITC that would be available. It is not asked to you to calculate net GST. Clear? So not doing that. Fine. So let's go ahead. We are going strong. We have to do 18 questions today. Covered 2 of them till now. Wonderful. Next I have selected for you is question number 7. Now see question number 7. Krishna Enterprises India registered supplier under GST in state of Tamil Nadu. So Krishna Enterprises India is in Tamil Nadu. It is engaged in supplying goods and services. Krishna Enterprises undertook the following transactions during the month of March. Okay. Supplied large paper rolls to Lotus Public School, which is in Telangana. Mind you, Lotus Public School is in Telangana for printing of question papers. Okay. As directed by the school, the rolls were delivered to printing press in Chennai, Tamil Nadu. But first, let's see what is the question asked. Question asked is total GST payable on outward supplies before setting off of ITC for the month of March by Krishna Enterprises. Okay, very good. So now understand which GST will be chargeable, because you have to calculate CGST, SGST, IGST separately. Understand? We are in Tamil Nadu. So can I say location of supplier is Tamil Nadu? Now keep on identifying place of supply also. Why? Because location of supply, place of supply, if in same state, CGST plus SGST. If in different states, then IGST. Now, we supplied large paper rolls to Lotus Public School, Telangana. So friends, here to identify place of supply, section 10(1)(b) becomes applicable. Of course, of IGST Act. Place of supply provisions are given in IGST Act. So, it is build to ship model. Build to ship model means what? Krishna Enterprises is supplier. It will do billing to whom? It will do billing to Lotus Public School. So Krishna Enterprises, as you all know, is in Tamil Nadu, but this Lotus Public School is in Telangana. Okay, it is in Telangana. It is in Telangana. But shipping is done to, but friends, shipping is done to, as directed by school, the rolls were delivered to printing press in Chennai, Tamil Nadu. But shipping is done in Tamil Nadu itself. So bill to and ship to model this is. So in 10(1)(b), understand this person is called as third party. and this person is called as recipient. So in this case, place of supply is location of the principal place of business of third party, that is Telangana. That is Telangana. So location of supply Tamil Nadu, place of supply Telangana. So there will be chargeable on this 18 lakhs IGST. I hope all of you got it. Very nice point, because physically the goods are being delivered in Tamil Nadu itself, but I don't have to go for location where physical delivery is happening. I have to go for bill to ship model, third parties principal place of business. Okay, then recovered bond amount from an outgoing MD. So see, this is not taxable. This is not supply. Supplied steel sheets in territorial waters. Very interesting. Supplied some steel sheets in territorial waters 14 nautical miles from Tamil Nadu. Okay, from 14 nautical miles from Tamil Nadu baseline and 10 from Andhra Pradesh. So basically, it's in territorial waters. Now you have to check it is nearest to which baseline. So it is which state is nearest. So nearest is Andhra Pradesh. So here place of supply will be Andhra Pradesh. Location of supplier Tamil Nadu. Place of supply Andhra Pradesh. So again there will be IGST. Okay. Received advance. Very amazing question, because time of supply concepts are also coming into picture. Received advance for future supply of goods. Okay, for future supply of goods we are receiving advance. So friends, we discussed that for goods, time of supplies, date of issue of invoice, or the last date when invoice is supposed to be issued, whichever is earlier. Here there is no reference in section 12.2 of date of receipt of payment. Means 12.2 is date of issue of invoice or the last date when invoice was supposed to be issued, whichever is earlier. So receipt of payment doesn't matter, thanks to our notification 66 by 2017-CT. So it doesn't matter. So right now there is no time of supply of this advance for goods. So there is no question of GST to be paid right now. Received advance for future supply of services. Surely there is GST in this. Right now I have to pay GST on this, because time of supply in case of services depends on date of receipt of payment also, because it is date of issue of invoice or date of receipt of payment, whichever is earlier. Yesterday's banquet hall example, I hope all of you remember. Yes, so for this 560, the supply happens right now. So yes, now customer is in Tamil Nadu. I'm assuming place of supply will be Tamil Nadu only. Location of supply is also Tamil Nadu. So in this case, you will have CGST plus SGST. Then gave a desktop computer, okay, which was used in business use, but no ITC was taken free to an unrelated person in Tamil Nadu. Friends, this is not supply. Why this is not supply? Because there is no consideration involved. Okay. Now, whenever there is no consideration involved, it is not a supply, because to constitute a supply, there should be activity for consideration in the course or furtherance of business. Isn't it? There should be activity for consideration in the course or furtherance of business. Now, in this case, it's not an activity in the course or furtherance of business, because there is no consideration. To constitute supply, there should be activity in course of furtherance of business, plus there should be consideration. Here there is no consideration. Further, some activities are called as supply even if it is without consideration. Such activities which are given in Schedule 1. In Schedule 1, you have first activity as permanent transfer or disposal of business assets on which ITC has been availed. But in this case, no ITC was taken. So that's why it is not a supply. So in short, this first transaction and this third transaction, these are chargeable to IGST. So 18 lakh plus 7 lakh 20,000, that is 25 lakh 20,000. On 25 lakh 20,000, calculate GST at 18%. Okay, 4 lakh 53,600. IGST will be 4,53,600, and CGST and SGST each will be only one transaction, that is of this 5,60,000. So do 5,60,000 into 9% each, that is 50,400 each of CGST and SGST. Let us see the presentation for the 7th question. Yes, friends. Go ahead. See the presentation for 7th question. As we discussed, a statement showing total GST payable on outward supply. Of course, it was before ITC. Large paper rolls which are supplied to Lotus Public School in Hyderabad. It will be interstate supply. 18 lakh is the amount. Recovering bond amount is not a supply. Then steel sheets in territorial waters 10 nautical miles from Andhra Pradesh. Place of supply will be Andhra Pradesh. So it will be an interstate supply. Then received advance for future supply of goods. It is not time of supply. Right now there is no time of supply for this, so it is not a supply. Then for supply of services, the advance was received. Yes, in this month there is a time of supply for this. So this 5,60,000 will be considered in the value. And giving desktop right now to unrelated person is not equal to supply. So nil. So finally, as we discussed, 25,20,000 is the value of what? Interstate supply. On this, calculate GST at 18%. 5,60,000 is value of intrastate supply. On this, charge GST at 9% each. So this is the answers that we have got. Clear, friends? Fantastic. Thank you so much, guys, for liking the video by heart also and on the YouTube also. Very grateful for that. And go ahead and please do subscribe to the channel and hit the bell icon so you don't miss out on any of the videos. And if you want these notes, don't forget to download our app, that is CA PRATIK NEVE ZEST Learning. You can refer to the description to the video. You will get all the possible details. But continue this streak. Okay, watch till 17th of December. Daily basis will be coming live. Watch till 17th of December. If you keep this streak going, then only you will get benefit out of it. Anything done consistently really works miracles. Question number 8. Next one. Examine GST implications in FY 25-26 in following 3 independent scenarios. Case 1. Donation without quid pro quo means, see what is happening. Mr. Aditya Sharma, a philanthropist, donates a digital blackboard worth 75,000 to an Ayurveda and Wellness Center in Pune. Below the board, the center affixes a message that reads, "With blessings from Mr. Aditya Sharma." The donation is voluntary. No formal agreement exists. no formal agreement exists between donor and the center for promotion or services in return. Question is, determine if GST is applicable in each case. So in first case, GST is not applicable. Why it is not applicable? For obvious reason that, you know, just it is a donation. So that Mr. Aditya Sharma has just given the whiteboard, whatever that board. There is no question of GST in this case. Okay, nothing in return is there. Then donation with simple acknowledgement in religious place. Srimati Kiran Nair from Kochi donates 2 lakh to temple trust. So 2 lakh is donated to a temple trust for construction of meditation room. At her request, a message is inscribed on the marble entry, donated by Srimati Kiran Nair in loving memory of her father. So friends, again in this message, there is no obligation of any advertisement, etc. So in short, this lady has given 2 lakh rupees without anything in return. Okay, so the donation is used entirely for religious charitable infrastructure, no advertising intent. So this is also not a supply. And lastly, donation with advertising benefit. So you here in the last third case, this Rohan Foods Private Limited, a packaged food company based in Mumbai, donates 1 lakh. They may be calling it as donation to sports NGO for organizing a youth marathon. See, they may be calling it donation, but against that 1 lakh rupees given, they are expecting something in return. What are they expecting in return? In exchange, NGO displays company's name, logo, slogan on jerseys of the participants, banners at the start and finish line, and all event social media posts. So friends, actually this is 1 lakh rupees given for advertising services, or you can say sponsorship services. So it is a supply. So in last case, there will be GST at 18% on that 1 lakh rupees. Is it clear to all of you? So see, in first case, where it was digital blackboard donation, there is no benefit in return. So it is no supply under GST. Okay, no GST applicable. In case 2, temple infra donation, no benefit in return, no contractual benefit given to the donor. So no GST applicable. Okay, and corporate donation with advertisement, that is the point. So there will be GST on this 1 lakh. The return benefit is display of brand, logo, social media promotion. So this is a sponsorship or advertising service, which is just disguised as donation. So it will be supply of service. Clear? Value of supply is 1 lakh. GST is 18,000. Total invoice value to be given is 1 lakh 18,000. Of course, assuming that 1 lakh was exclusive of GST. Okay. GST of 18,000 is payable by NGO, which must treat this donation as taxable consideration for sponsorship services. Is it clear to all of you? Yes, sir. Next. So I hope things are getting absolutely clear to you. Now we have to do 10th question. Are you ready? Wonderful question, 10th one. Depending on many things in job work also. Many things from job work also will get revised in the 10th question. Manoj Engineering Works. So can I say Manoj Engineering Works, MEW, registered in state of Uttarakhand. Can I say UK? Uttarakhand. Manufactures aluminium pipe for other suppliers on job work basis. On 10/1/25, Royal Cast Components, registered in the state of Punjab, sent, okay, raw aluminium worth 5 lakh and casting molds worth 60,000 free of cost to Manoj Engineering Works for job work. Okay, I'm just changing the position of Manoj Engineering Works. First, I'm writing Royal Cast Components. Why, you will understand. RCC, Royal Cast Components, Punjab. They are sending the goods to Manoj Engineering Works, Uttarakhand. Clear, all of you? Examine. What you have to do is the scenario and respond on the following. So first, with reference to job work provisions. So first now, we will have to, structure out in our mind what exactly is happening. So RCC is principal and MEW is job worker. Let's try to figure out what is happening. So on 10/1/25, on 10/1/25, Royal Cast Components sent raw aluminium worth 5 lakh. What it sent? Raw aluminium. Worth how much? Worth rupees 5 lakh. Worth rupees 5 lakh. And casting molds worth rupees 60,000. Casting molds worth rupees 60,000 free of cost to Manoj Engineering Works for job work. Manoj Engineering also used its own material, which is a heat resistant coating compound worth 1,20,000 during manufacturing of pipes. It raised an invoice of 2,50,000 as job work charges. So MEW has raised invoice of 2,50,000 as job work charges and returned the manufactured goods via challan to Royal Cast Components on 2010-2025. This happened on 2010-2025. So far so good. So see, main thing is imagining, visualizing the things and then try to answer the questions. On the same date, Manoj Engineering Works manufactured similar quality and quantity of aluminium fittings using its own raw material and sold them to Metro Pipe in Uttarakhand for 8,25,000. So this Manoj Engineering Works, it has sold similar goods to another Metro Pipe traders for 8,25,000 on the same date. Okay. So you will feel, so why 825 and why here only 250? See, here only job work was done. Only job work service was done. That's why only 2,50,000. But here entire goods were manufactured and sold by MEW to MPT. That's why 8,25,000. So two non-comparable transactions. Question is there any difference in nature of supply by Manoj Engineering Works, MEW, to Royal Cast and to Metro Pipe? That's exactly I was telling you right now. This is just a job work service supply done by MEW to RCC. But MEW to MPT is sale of goods. That is the biggest difference. Okay. Can Manoj Engineering Work use its own material in job work? Fantastic question. So basically job work is a supply of service. Yes. So MEW can use its own material also and do the job work and supply. Still, it continues to be supply of service. How? Because Schedule 2, which gives difference between some activities called as supply of goods and some activities called as supply of services. In that, it is said that job work is a supply of service. Getting it? So job work is a supply of service. So even if I'm using my goods to do job work, it is still a supply of service. So yes, it can use its own materials in job work. Is sending raw material and molds by Royal Cast Components to Manoj Engineering Works treated as supply? Very good question. Initially, Royal Cast Components is sending what? Raw materials and molds to Manoj Engineering Works on 10/1/25. This. Is it supply? The answer is no. This is not a supply because it was sent for job work. Okay, so it is not a supply. It can be sent only by making challan. It can be sent only by making challan. It is not considered as supply. And lastly, should Manoj Engineering Works include cost of free materials supplied by principal in the job work invoice? Okay, the answer is no, because already 2,50,000 rupees is charged, na? Already 2,50,000 rupees is charged, which is consideration for supply of that job work service. Okay, so no, it should not be charged. So this way you can easily answer the said question with the knowledge of job work. Okay, job work is section 19. You all know job work is section 19. The ITC in case of job work is section 19. See, so yes, supply to Royal Cast Components is supply of service as we discussed. Job work act service. But supply to Metro Pipeline traders is supply of goods. Clear? Yes. Job works are allowed to use their own material. Job workers can use their own material in addition to material supplied by principal. Okay. No, as per section 143, section 143 is procedure in case of principal to job worker. Procedure in case of job worker. Sending inputs or capital goods by principal to job worker without consideration is not treated as supply. So just make challans and send it. No, as per rule 33, value of input supplied free of cost by principal is not includable in the value of job work if no consideration is charged for the same. Clear? This way you have to understand. So in short, job work to Royal Cast Components is a supply of service. Sale to Metro Pipe Trade is a supply of goods. Use of own material in job work is allowed. Free issue of inputs in job work is not treated as supply. And inclusion of free issue of in value is not required. So this way you could have done the said question. Clear, friends? May I know who all is consistently watching the session so that I can nicely communicate with you? And I know many students will take advantage of this in the recorded form also. Let's go ahead. Consider following independent scenarios in FY 25-26 and answer the questions that follow. Questions are, you are required to determine whether supplies in both cases are composite supply or separate supply. If you can determine that, you have to compute GST payable at 18%, where applicable, and you have to clarify if electricity charges will form part of value or they are to be excluded. We'll do that. As we go ahead, we'll be able to understand what they're asking. Case 1, Galaxy Cinemas, located in Hyderabad, runs a multiplex and also operates a food counter. Very obvious. If you go to Inox, any good theater, they will be having, of course, movie theater as well as food counters in cinema premises. During the month of April, the following sales were made. So cinema ticket sales. So obviously, this is supply of service of movie ticket sale. So this will be chargeable to GST at 18%. No doubt. So 8 lakh into 18%, calculate. GST will be 1 lakh 44,000. Then standalone sale of food and beverages. This is a sale of food and beverages only, is a restaurant service. So on this 3 lakh at 5%, GST will be 15,000. Combo offers ticket and food package bundled together. That means in a single price, there is a movie ticket plus facility of buying some food. So this is a composite supply in which principal supply will be of cinema. So on 2 lakh, GST will be at 18%. Okay, see. Check. See this. Composite supply. Principal supply will be cinema. And then standalone sale of foods will be restaurant service. Okay. So see. On cinema tickets, on 8 lakh at 18%, 1 lakh 44,000. On standalone sale of food and beverages, 3 lakh into 5%, 15,000. Combo offer of, movie tickets plus food, it will be treated as composite supply. So composite supply is supply of principal supply. Principal supply was of movie tickets. So on 2 lakh at 18%. That's it. Not asked bifurcation between CGST and SGST. Then friends, there is a case 2 also in this. What is the case 2 in this? Means 2 independent cases. Urban Spaces Realty, a commercial property management firm in Mumbai, rents out furnished office space to tenants. Okay. In April 2025, it raised the following invoices to a single tenant. Rent for premises is 1,50,000. Maintenance charges is 30,000. Electricity bill charged separately is 20,000. Urban Spaces, of course, procures electricity from Maharashtra Discom at 20,000 and charges the same amount to tenants without markup. In short, what has happened is I have given you property on rent and I am charging from you 2 lakh rupees in total. The breakup of 2 lakh is given. 150 is rent, 30,000 is maintenance, and 20,000 is electricity, which I am not providing, but I am just passing on the bill to you. So of course, on this 20,000, there is no GST. This is 20,000 is just I am taking from you as a pure agent. You are getting the bill from Mahad Discom. That amount I am just recovering from you. So accessible value here will be not 2 lakh, but accessible value will be 1,80,000. See. So renting plus maintenance plus electricity bill is a composite supply. Let it be. Principal supplies of renting of immobile property. But friends, electricity forms part of composite supply unless charged as a pure agent. But in given case, what has happened? It is charged as a pure agent. As per CBIC circular number 206 by 18 by 2023 GST dated 31st October, it is clarified that whenever electricity is being supplied bundled with renting of immovable property and maintenance of premises, it forms part of composite supply and shall be taxed accordingly. The principal supply is renting of immovable property and or maintenance of premises, as the case may be, and supply of electricity is an ancillary supply, as the case may be. Even if electricity is billed separately, the supplies will constitute composite supply and therefore rate of principal supply, that is GST on renting of immovable property, would be applicable. Okay, but what is happening? Urban spaces charges exact electricity cost, means they are showing the breakup in the bill and exactly sorry, exactly whatever bill they are getting, only that much amount they are recovering from recipient of supply. That's why we can say that they're acting as a peer agent. That's the whole catch in the question. That's why assessable value will be only 180 and this 20,000 will be exempt. There will be no GST on that. So on 1,80,000, you calculate GST at 18%, 32,400 would be chargeable, would be GST. Clear? If markup was added or no pure agent agreement existed, then electricity would be taxable. You know na, any amount which is recovered as pure agent should be excluded as per rule 33 of CGST rules. We have done this in value of supply. Anything recovered as pure agent should be excluded. Clear? So this way we are on the track right now. Now go ahead and do 15th question. Are you there with me for the 15th question? 15th, 16th, then this topic will be done. Clear? Yes, sir. Absolutely. XYZ Private Limited, registered supplier under GST, is engaged in supply of goods and services. Company sells printers, printer cartridges, and also provides AMC for printers. It offers following two types of supply packages. Okay. Package A, printer bundle offer. Okay. Package A is printer bundle offer and package B is AMC for printers. Getting it? Now, what is the question? Supply of AMC and spare parts are not naturally bundled. Okay, remember this. Annual maintenance contract and spare parts is not naturally bundled. Remember that. You have to identify whether each package constitutes composite supply or mixed supply. Compute the applicable GST rate and total GST liability for both packages. You have to compute applicable GST rate and total GST liability for both packages. Okay. Now, laser printer 18% and black ink cartridge, total price of the package is 15,000. So you can say black ink cartridge is a incidental supply. Yes, it is a incidental supply and laser printer is a principal supply. Yes. So friends, what will happen? GST, it will be treated as supply of principal supply. This entire package will be treated as supply of principal supply. So principal supply is of laser printer. Please calculate GST at 18%. On 15,000, GST will be at 18%. Are you getting 2,700? And then package B, routine maintenance services and replacement of minor spare parts. But total price is 10,000. Friends, they have only given you, they are not naturally bundled. So these two will be treated as mixed supply. There is no other option. This will be treated as mixed supply because a single price is charged of 10,000. So the GST which is at higher percentage will apply, that is 18%. So 1,800. Clear? Yes, sir. Check. See, as we discussed, first is composite supply, 18% because it will be treated as supply of principal supply. So GST 2,700. And in package B, AMC for printer plus spare parts, mixed supply. It will be treated as supply which attracts highest rate of GST. So 18%, so 1,800. Clear all of you? Let's go to last question of this topic. Question number 16. Answer following independent cases as per GST law. Customer books a hotel room for rupees 8,000 but cancels the booking before the stay. You know, flight cancellation, hotel cancellation, cancellation charges is a separate consideration. So cancellation charges they have taken as 2,000 or cancellation fee. Now, is this called as supply? The answer is yes, it is supply. So there will be GST on this at 12%. Clear? Yes. And secondly, XYZ Private Limited has contractual clause that imposes check bounce charge of 2,500 on customer if check provided is dishonored. Management of XYZ Private Limited is reviewing whether this check bounce charge should attract GST. So friends, this is nowhere in, you can say, reply or against the supply of goods or service. So this should not attract GST. Okay, let's see. So see, the hotel is providing facility to book a room and cancellation fees are part of service contract. Cancellation fees are considered as taxable supply under accommodation services. So GST at the same rate as hotel services, that is 12%, is applicable on cancellation charges. Clear? And what is the nature of check bounce charges? Check bounce charges are imposed as penalty for non-performance of a contractual obligation. These charges are not levied as a consideration for supply of goods or services. Instead, they act as a compensatory penalty. The relevant CBIC circular clarifies that Charges which are imposed as penalty for failing to perform an act and do not, form part of consideration for a supply are not taxable under GST. That's why, it is not subject to GST in the given case. So friends, this way we complete the topic of scope of supply as of now till we move to the next level. So is it fine? Have you understood? Today we did which questions? 15, 16, 15, 16, 11, 10. So 10, 11, 15, 16, 10, 11, 15, 16, 8, 8, 10, 11, 15, 16, 7, 8, 10, 11, 15, 16, 7, 8, 10, 11, 15, 16. 3 also. 7, 2 also. 2, 3, 7, 8, 10, 11, 15, 16. 2, 3, 7, 8, 10, 11, 15, 16. So these many questions I have done for you. Okay. Now let's go to reverse charge mechanism. Let's go to RCM. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 questions we have done of this topic of scope of supply. And as of now, 6 questions we have done of time of supply. Okay, let's go to RCM. Even though I'm calling this topic as RCM, it will also have questions of liability of ECO to pay GST. Liability of ECO to pay GST. That also will be covered. And believe me, right now, 10 out of 10 questions we are going to cover of this topic. So today, by today's day end, we are completing entire RCM topic. Okay. So this way now, very strongly, we are going ahead. Go ahead. Yes, see this now. How many questions are there? As we discussed, there are about 10 questions in this topic. Ready, all of you? Yes, sir. Mr. Rajiv Kapoor, registered consultant based in Chennai. There's a registered consultant, he's a consultant based in Chennai, provided management advisory services worth 5 lakh to Elite Tech Solutions Limited, company registered in Mumbai. As per the service agreement, Mr. Kapoor was responsible for bearing all the taxes, duties, and related liabilities to his service obligations. In short, 5 lakh rupees is the management advisory fees, okay, including GST and everything. However, after the agreement was executed, hypothetical situation, and while services were ongoing, change in GST law was notified. The change made recipient, that is Elite Tech Solutions Private Limited, liable to pay GST on such services under RCM with retrospective effect. Okay, you are required to answer the following questions. Can Elite Tech Services Private Limited, that is the supplier, can supplier, sorry, supplier is Rajiv Kapoor, Elite Tech Solutions Private Limited is recipient of supply. Can the recipient of supply, now liable under reverse charge, deduct GST amount payable from consideration payable to Mr. Rajiv Kapoor, citing the contract terms? Of course, on 5 lakh, GST will be at 18%, 90,000 rupees. So 90,000 can be reduced. Yes, we'll have to do that and pay this 90,000 to the government on RCM basis. Can Elite Tech Solutions Private Limited request GST department to recover GST payable under reverse charge from Rajiv Kapoor, given the contract clause that service provider must bear all tax liabilities? Straightforward answer is no. Because once government has put liability on RCM basis, then they will not collect from supplier. Okay, it will be recipient of supply who will be liable to pay GST. So see, can recipient deduct GST from Mr. Kapoor's bill? Yes. The recipient can recover burden of GST from service provider contractually, even though law imposes GST under reverse charge on recipient. This was upheld in Rashtriya Ispat Nigam Limited versus Devanchand Ram Saran, okay, by Honorable Supreme Court, where Supreme Court held that recipient could deduct tax amounts from payments to the contractor where contract provides that all taxes were to be borne by the contractor. So on 5 lakh GST is calculated at 90,000. So recipient of supply will pay to supply only 4 lakh 10,000. It will keep that 90,000 rupees and pay to the government on RCM basis. Clear? Then can recipient request GST authorities recovery from Mr. Kapoor? No, because there is a RCM notified now, means the company who is receiving service should pay GST. They cannot force government to collect from supplier. So no, recipient cannot request GST department to recover the tax from service provider. Okay, this was clarified in Delhi Transport Corporation versus Commissioner of Service Tax, where it was held that contractual allocation of tax burden does not change the statutory liability under tax. Okay, so what if you have decided that thing? Main is how GST law applies. Under GST, reverse charge liability rests with recipient as per 9394 of CGST Act or corresponding 53 of IGST Act. So Elite Tech Solutions Private Limited must pay 90,000 GST under RCM and may recover or adjust it contractually with Mr. Kapoor, but cannot ask the GST department to collect it from him. Okay, so can the recipient deduct from provider's invoice? Yes. But can recipient ask GST department to recover? No. Okay, now see the next question. Very interesting one. On 18th March 2025, Sanjay Mehra, a resident of New Delhi, booked a motor cab using mobile application Zoom Ride. Getting it? Mobile application Zoom Ride is being used. Sanjay Mehra is recipient of supply because he's booking a motor cab using Zoom Ride owned and operated by Zoom Mobility Private Limited. So can I say Zoom Mobility Private Limited is ECO? Company located in Mumbai. The cab was booked for interstate travel from New Delhi to Gurgaon. Fare charged is 1800. Payment made by debit card. Driver assigned. This driver assigned is supplier Joravar Singh. Okay. Now you know what I'm talking about. Here is a supplier. Here is a recipient of supply. There is a ECO. So in this case, neither supplier is liable to pay GST to the government nor recipient of supply. Who is liable to pay GST to the government is ECO. So that's what ECO is liable to pay GST. Who is liable to pay GST? So this is given in 9(5) of CGST Act and corresponding 5(5) of SGST Acts and IGST Acts. Okay. What would be answer if Zoom Mobility Private Limited is located in New York? Friends, if that Zoom Mobility is located in New York and has no office or representative in India, then they shall appoint representative in India to pay GST. Clear? So yes, who will be liable to pay then? Appointed representative. Clear? And compute GST amount assuming applicable GST rate on motor cab service is 5%. Please calculate at 5% on 1800 rupees. That will be, I think, 90 rupees. So 90 rupees is going to be GST. So it's so simple. You should know 55 and 95. What other things are covered in 55 and 95? Means 95 of CGST Act, that is liability of ECO to pay GST. When some notified services are supplied through ECO, it is liability of ECO to pay GST. Friends, which are those notified services? One is this cab. Second is bus operator services provided by other than company. Third is, yes, housekeeping services. Housekeeping services provided by unregistered person. Fourth is accommodation services provided by unregistered persons. And fifth is what? Yes. Fifth is, see, I covered what I have not covered. Restaurant services. Okay. Yes. So these are the five services. So, I, in simple language, state five examples of the ECOs. Ola, very good. Acha, so you are watching the session. Wonderful, wonderful. So is the session helpful, guy, for you? Very nice to see that you're watching the session continuously. So Ola, then Zomato, then so five representatives I am talking about. Urban Company, then Airbnb and Redbus. Wonderful. What's your name? 1, 2, 3, 4, 5. Wonderful. So see, as per 9(5) of CGST Act, read with 5(5) of IGST Act, in case of passenger transportation services by radio taxi, where the supply is made through ECO, the ECO is deemed to be supplier and is liable to pay GST, not the actual driver. So Zoom Mobility Private Limited owns the Zoom Ride app and operates from India. Hence, Zoom Mobility Private Limited is liable to pay GST on cab booking and not Joravar Singh. If ECO is located outside India, then it will be liability of, yes, then it will be liability of representative in India. So if ECO is located outside India, it must appoint a person in India to discharge tax liability. If the ECO has no physical presence and no representative in India, it is required to appoint a person for payment of tax on its behalf. Thus, Zoom Mobility Inc. USA must either have a representative in India to pay GST or appoint a local person specifically for tax compliance. Clear? The appointed person in India will then be liable to pay GST. Clear? Wonderful. Then GST amount will be 90 rupees as we discussed. So total invoice value will be 1890. Zoom Mobility Private Limited is liable to pay GST of 90 as GST under forward charge when located in India. Clear? Yes. Wonderful. Wonderful. Let's go ahead to question number 3. Chalo guys, only now 8 questions remaining for the day. Messrs. Aryan Travels, passenger transport service provider based in Ahmedabad, Gujarat, is registered under GST and provides its service via ECO platform called Quick Move Cab Service. Okay, owned and operated by Quick Move India Private Limited, located in Mumbai. So basically, now Quick Move Cab Services will be liable to pay GST. Let it be non-AC, doesn't matter. Let it be stage carriage or let it be contract carriage. Doesn't matter. GST will become payable at 5%. Determine who is liable to pay GST. As we discussed, the liability to pay GST will be of ECO. And actually, the transport of passenger by stage carriage, which is non-AC, is actually exempt, and transport of passenger by contract carriage non-AC is actually exempt. But right now, the exemption is cancelled if the supply is via ECU. Clear? That's why the taxability continues. So see, with as per 9(5), it will be liability of ECO to pay GST. Clear? Now, with effect from 1/1/2022, passenger transport service by non-AC stage carriage, non-AC contract carriage, as well as metered cabs and e-rickshaws will be taxable when supplied through ECO. And ECO becomes liable to pay GST under, can't say reverse charge actually, but under the liability of ECO to pay GST. Therefore, it is liability of Quick Move India Private Limited, the ECO, to pay GST. Is it clear to all of you? So on both, there will be GST. Okay? Make sense? Yes, sir. Absolutely. Absolutely. Wonderful, wonderful. Question number 4. Muhammad Rafi, a renowned unregistered author, also known as IDT Guru, supplied services to Surya Publications. So can I say Muhammad Rafi is supplier? Can I say Surya Publications is recipient of supply? Located in Jaipur, Rajasthan, by way of temporary transfer of copyright related to his latest original literary work. Now, total consideration agreed is 3 crore rupees. Total consideration agreed is 3 crore rupees. Okay. Service completed is manuscript submitted to the publisher. That is the status. Invoice is not yet issued. Rafi believes that GST is payable by publisher under reverse charge. Absolutely, absolutely. Reverse charge mechanism applies in this case. But on optional basis, author can choose FCM. Okay, as per relevant notification. However, Surya Publications has refused to pay GST under reverse charge and insists Mohammad Rafi or Mr. Rafi should take care of tax compliance. Examine whether Mr. Mohammad Rafi's view is correct in GST law. So actually view is correct. The liability is of publisher to pay GST on RCM basis. All of you understood. Supplier is Mohammad Rafi. Recipient of supply is Surya Publications. So RCM is applicable. But now, if his view is correct, what recourse is available to him if publisher refuses to discharge tax liability? But if publisher says, I will not pay tax, then that Mr. Rafi can pay GST on FCM basis, but he'll have to satisfy the conditions. That is, he will have to take registration under GST. while issuing the invoice, in the invoice he'll have to mention that I am paying GST optionally on FCM basis. So Rafi's view is correct. As per notification number 13 by 2017 CT, services provided by an author to publisher by way of transferring, permitting use or enjoyment of copyright relating to original literary work are covered under RCM. So they are covered under RCM if author is not registered and publisher is registered and located in the taxable territory. In this case, Rafi is unregistered. Service pertains to copyright. The recipient, Surya Publications, is located in Jaipur and is registered. Hence, Surya Publications is liable to pay GST under RCM. Clear? Yes. What is the recourse if publisher refuses to pay GST under RCM? If recipient refuses to pay GST, the unregistered author, that is Rafi, may opt to pay GST himself under forward charge by exercising the option in 9.1. But what are the steps or what are the conditions to be followed? He should register under GST as a supplier. He should file declaration in Annexure 1, small procedural compliance, and exercise the option to pay GST under forward charge. And this option, once exercised, cannot be withdrawn within 1 year. And declare in Annexure 2, okay, in GST IN with 01 issued to Soya Publication stating GST is being paid by author under FCM basis. So on 3 crore, the GST will be 54 lakhs, that is at 18%. So total invoice value will be 3 crore 54 lakhs. Okay, now if it is FCM, he will collect 54 lakhs from the publisher and pay it to the government. So if publisher accepts on RCM basis, publisher himself will pay 54 lakhs to the government. But if publisher doesn't accept, then Mohammad Rafi will have to pay on FCM basis 54 lakhs. Make sense? Wonderful, wonderful. Let's go ahead to question number 5. Last 6 questions of the day. Wonderful. Decide who is liable to pay GST in following independent cases, assuming that no, not necessary. I'll tell you honestly, not necessary that author should take registration. Why? Because if author is supplying only this one service where the tax is payable on RCM basis, then it is compulsory liability of recipient of supply to pay GST. Then recipient of supply should take registration compulsorily and pay GST. In such cases, the supplier is exempted from registration. Clear? That's why we can't say that it is compulsory for author to register as the aggregate turnover exceeds 20 lakhs. We can't say that. Section 23 allows him exemption from registration. 23, read with notification. Because he is exclusively engaged in supply of such services which are taxable on RCM basis. Got it, no? Means author is providing a service to publisher. The liability is on RCM, na? So publisher will pay GST and publisher will get compulsory registered. Author may not take registration also. Yes, wonderful. Decide, 5th question. Decide who is liable to pay GST in following independent cases, assuming that recipient is located in taxable territory and aggregate turnover and exemptions are not to be considered. Raghu, a freelance marketing consultant, provided sponsorship services to We Win Cricket Academy LLP. So friends, now who is liable to pay GST? Who is the supplier of service? Supplier of service is Raghu. Recipient of supply is this LLP. So liability to pay GST will be of LLP. Safe Trans, registered GTA, transported goods. So GTA is giving services to firm. Firm is not registered under GST. URD. Okay, so basically in this case also it will be reverse charge mechanism. The ROS will be liable to pay GST. I'm assuming that GTA has not exercised the option of paying tax at 12% under FCM. So see, sponsorship services provided to LLP. When any person provides sponsorship services to body corporate or partnership firm or LLP, then the recipient is liable to pay GST under reverse charge, provided recipient is located in taxable territory. In this case, supplier is Raghu, recipient is Vivin, Cricket Academy LLP, RCM is applicable, so GST is payable under reverse charge by Vivin. Then, no. Who told you? Who told you sponsorship is without consideration? It is with consideration. Then, GT, when GTA provides services to specified persons, including firms, whether registered or not, okay, and GT has not opted, I assume that GT has not opted for 12% or 5% under FCM. Okay, then recipient is liable to pay GST under reverse charge. That way. Next, sixth one. Friends, last five for the day. Fifth is sixth one. Sixth is very deep question. It includes topic some point in value of supply also. If you know the rule for valuing lottery tickets, okay, lottery, betting, gambling are specified actionable claims. So valuation of lottery is discussed in rule 31A. So you know we are going to apply that 31A here. Okay, rule 31A of CGST rules. So see, why? Because section 15 subsection 5 of CGST Act talks about in case of notified goods or services, the value will be as prescribed. Value will be as prescribed. And for lottery, it is prescribed. Okay. And there are specified actionable claims. In 31A, the valuation is prescribed. Now see, Messrs. A Distributors, registered lottery distributor based in Bhubaneswar, Odisha, is appointed by state government at Odisha as an authorized agent for selling government lotteries. During May 25, the company distributed following lottery tickets. Okay. Particulars: Kalinga Shri printed and Kalinga digital online. Type of lottery run by state government. Number of tickets proposed 3 lakhs. Face value per ticket 20. Guaranteed price payout 60%. Doesn't matter. Number of tickets sold doesn't matter. Number of tickets proposed or printed matters. Now yes, here they are printed. So value will be 3 lakh. I tell you here, value will be 3 lakh into 20, which is face value. So face value is 60 lakhs. So what you have to do, 60 lakhs or check the price notified by government is 16. So 16 into 3 lakhs, which is 48 lakhs. So 60 lakhs or 48 lakhs, whichever is lower. No, not lower, whichever is higher. So what you should do, you should take this 60 lakhs, multiply by 100 divided by 128. Why? Because that is given in rule 31A. That is how the valuation happens. Okay, face value or price notified multiplied by 100 divided by 128, and whichever is higher. So both you will do into 100 divided by 128. Of course, higher will be 60 lakhs into 100 divided by 128. So 46 lakh 87,500 will be the assessable value. In case of Kalinga Shri printed and Kalinga Digital Online, in Digital Online, you will go only for number of tickets sold because it is not printed, it is online. That's why only the ones which are sold, only those matter. So that's why it will be 2,20,000 into 400. 2,20,000 into 400, which is 220 into how many rupees? Face value is 400. So 8 crore 80 lakhs. Friends, 8 crore 80 lakhs or 310 into 2,20,000, that is 6 crore 82 lakhs. Go for whichever is higher. So 8 crore 80 lakhs into 100 divided by 128. So it will be 6 crore 87 lakh 50,000. This will be assessable value. Now determine the person liable to pay GST. Person liable to pay GST is the one who is on reverse charge basis. Means not the lottery distributor, means not the person who is conducting the lottery, but the agent. Okay, and values so we have calculated, and GST on that at 14% each we will calculate. So see how it happens. So as we discussed, 46,87,500 and 6 crore 87 lakh 50,000. Okay, that will be the values. See, person liable to pay GST in case of supply of lottery by distributor or selling agent authorized by state government. GST is payable by lottery distributor, that is Aryavarta Distributors Private Limited. They will be liable to pay GST. And as per 31A of CGST rules, it will be higher of 100 into 128, 100 by 128 into face value, or 100 by 128 into notified price. For printed lottery, we are going for the number of tickets printed. Okay. And here we are going only for number of tickets sold. In case of online lottery tickets, number of tickets sold is equal to number of tickets printed. Okay. So this way you should go ahead and find the accessible values. When you get the accessible values, GST will be calculated at 14% each. Okay. Shall we go ahead to last 4 questions of today? Ready? Yes, sir. Absolutely ready. So now next question is Saffron Residency, a boutique hotel located in Kochi, Kerala, provides only accommodation service. Its annual turnover is less than 20 lakhs. So maybe it is URD, unregistered. Hotel is unregistered. Friends, hotel is unregistered. Here is the recipient of supply. What has happened? Hotel has listed its room on digital booking platform Travel Nest India Private Limited. Travel Nest India Private Limited. So this is a ECO. Now friends, which is similar to Make My Trip, an ECO. Fantastic. So who will be liable to pay GST? Not hotel because it is unregistered, not recipient of supply, but ECO. ECO will be liable to pay GST. Now on how much? During May 2025, the following bookings were made through Travel Nest. Non-AC room doesn't matter, GST is payable on this whole 1000. Okay. AC room, GST is payable on whole 1800. AC room plus extra bed 7000 and 1800. GST is payable on full 8800. AC room 7000 is paid by customer. So only on 7000 there will be GST. That is after discount. Now point is, what is the total GST liability? So GST rate is 12% for value per day per room 1 to 1000. It is 12% for 1001 to 7500. So basically 12%, 12%. But when it is 8800, it's going to be 18%. So here 18% and 7000 means also 12% because 18% starts from 7501. Clear? Let's see. See, person liable to pay GST. As per notification number 17 by 2022, in case of short-term accommodation services supplied through ECO, GST is payable by ECO. But in which case, if that is a hotel, that is the person who is providing the services unregistered. Yes, so see unregistered. Hence, Travel Nest India Private Limited is liable to pay GST under, means it is liability of ECO to pay GST. When non-AC 12%, AC 12%. See, what matters is the transaction value. Transaction value in third case is exceeding 7500. It is more than 7500. So GST is at 18% as given in the question. You are not expected to learn that. See, deluxe room finally 7000, so only 12%. Clear? Yes. So GST amounts you can calculate and accordingly go ahead. So may I go for third last question for the day, friends? About last 1 hour 45 minutes we have been working on this. So thank you so much for being so consistent in watching it till now. So I request you to now watch for next some minutes. About 15 minutes we'll do next 3 questions and that's it in today's session. Okay. See, Mr. Arvind Menon, senior advocate with registered office in Coimbatore, Tamil Nadu, provided legal services worth 1,50,000 to a business entity located in Trichy, Tamil Nadu. So basically, you have learned that individual as an advocate providing services to whom, or partnership firm as an advocate providing services to business entity would be taxable if that business entity's turnover in last year was exceeding such limit where registration is required. See now, turnover of Kavita Private Limited, that is recipient of supply last year, was 43 lakhs. So fantastic. They were liable for registration in preceding FY. So congratulations. This service is going to become taxable. So when this service is going to become taxable, okay, you know that GST in such cases will be payable on reverse charge mechanism basis. So it will be liability of Kavitha Infra Private Limited to pay GST. Available ITC they cannot use. Kavitha Infra cannot use available ITC because this is GST payable on RCM. It has to be paid in cash. So 1,50,000 is the value it's given. He was a senior advocate in Tamil Nadu. He was providing service to business entity in Tamil Nadu. Calculate CGST, SGST at 99% each. So it's going to be 13,500 each. Kavitha Infra will be liable to pay GST on RCM basis. So see, as per so and so notification, services provided by senior advocate to business entity which is in taxable territory will be chargeable to tax on RCM basis. Under RCM, the recipient of service is liable to pay GST, not the senior advocate. Therefore, Kavitha Infra Private Limited is liable to pay GST under RCM on legal services received from Arvind Menon. Clear? So as we calculated, 13,500 each and total 27,000. And don't use ITC. Whenever I'm liable to pay GST on RCM basis, then it is not an output tax. It is a tax on inward supply. So yes, pay on RCM basis. Okay. Next. So pay on RCM basis, pay in cash. Okay. Whatever liability I'm paying on RCM basis in cash, that I can avail as ITC, but I cannot use ITC to pay that. Mr. X, being a farmer, cultivated cashew nuts, not shelled or peeled in state of Kerala. These goods are sold to Raj Industries for 2,50,000. Registered person in state of Kerala. So friends, in such cases, there is an RCM. So it will be liability of Raj Industries to pay GST on 2,50,000 at 2.5% each. CGST and SGST. So 6,250 each. Clear? That's it. And even if they have any ITC, Raj Industries, they cannot use this ITC to pay this tax. Same thing. It is the tax which is paid on RCM basis. So it has to be paid in cash. So check 6,250 GST, CGST, 6,250 SGST. Liability to pay is of Raj Industries, covered under RCM. And must pay this 6,250 through e-cash ledger. Cannot use ITC. And friends, coming up to you is last question for today. Then we are meeting again tomorrow in the morning at 7:30. Very fantastic question. This is a question of 31B, online gaming. Rule 31B. See, we discussed 31A for lottery, 31B is for online gaming, 31C is for, yes, casinos. 31C is for casinos. Now see, Starbet Gaming, online money gaming platform based in Dubai, allows user to play virtual games and betting activities through its portal accessible in India. In November 25, Rakesh Sharma, unregistered player located in India, deposited 18,000. So friends, accessible value is whatever amount is deposited in the wallet of the gaming platform. So see, it is deposited in the Starbet master wallet. So basically now you do 18,000 into 100 divided by 118. Why? Because it is including GST. But let's find out rate of GST. The rate of GST is 28%. So upon 128, because 18,000 will be equal to 128. So 100 accessible value is how much? So 18,000 into 100 divided by 128. 14,063. 14,063 will be accessible value. Okay. The following transactions were made. Remember, accessible value is 14,063. He played a virtual drag race of 3,000 from the master wallet. Okay. As a result, 13,000 was credited back to his wallet as winnings. Good now. He won something. He won this 13,000. So basically 13,000 will be again deemed as deposited. So 13,000 will be again equal to 128. So 100 is how much? Calculate 13,000 into 100 divided by 128. That is 10,156. On another betting site run by Starbet called Star Arena 360, Rakesh placed a bet of 13,000 on international football match. The bet was paid via master wallet and lost the bet. Nothing, he lost the bet. This much amount will be subtracted from his wallet. After this transaction, Rakesh requested to withdraw the remaining balance to his account. You have to compute taxable values. So I told you taxable values and total GST payable. So total GST payable will be 10,156 into 28%, 2844. In this case, 2844. In 14,063 case, it will be 3938. 3937 you can take. Okay. That's it. So GST values and GST so we have calculated. And you have to calculate net amount transferred by Rakesh from the master wallet to his bank account after all gaming and betting transactions. So you have to do that plus minus. What plus minus you have to do? See. So as we discussed, total deposits is 18,000. 14,063 will be your accessible value and 3938 or 3937 will be your GST. And then 3640 will be next GST on the 13,000 which is deposited. So now, as we discussed, this will be GSTs. See, we discussed same thing. 14,063, 3938. Oh, one thing I should understand. 13,000 was deposited. Next one, that entire 13,000 will become accessible value. So don't do reverse calculation for that. So on 13,000 at 28% you calculate. 3640. Entire 13,000 will be deemed to be value in that case. So 7578 will be GST payable. Now what happens? Initial deposit was 18,000, but out of that GST was 3938. Okay, and amount used for virtual racing is 3,000. So that will be subtracted. So whatever is subtracted, you put it in bracket. 13,000 was winning on that virtual racing game. Okay. And amount used for online betting was 13,000 and GST on that was 13,000. Sorry, 3640. So amount which is available for withdrawal is 7422. Clear? So this way you can do this particular question. Very amazing question. Focus more on the first part of the question, that is how much will be the GST payable. Clear? So basically for this 13,000, GST will be directly at 28%. Okay. So friends, I hope that you have liked today's session and you have enjoyed it. And I'll be now seeing you tomorrow with the topic of exemptions under GST. So first quickly we will revise exemption topics, or for whatever sums we need to revise the exemptions, we will do that. There are 23 questions in exemptions. Okay. So right now in this batch, we have done 27 questions, 11 of scope of supply, 10 of RCM and liability of ECO to pay GST, and 6 of time of supply. Tomorrow we will go ahead and do many questions from exemptions. Apart from that, we will also do some more questions from time of supply. Tomorrow we will get done with this 2 topics. So our first 4 topics will be done. Then day after tomorrow onwards, we will go ahead and do value of supply, place of supply. That is on Sunday. On Monday, ITC, and then onwards the other topics. So this way, till our 17th of December, we will be easily able to do our entire, important questions. So of course, this will be for Jan 26 plus also my May, September 27 students can also watch, of course, and Jan 28. Sorry, 26 and Jan 27. It's for all this batch. So friends, thank you so much for being such wonderful audience. Would request you to subscribe to the channel and hit the bell icon so that you don't miss out on any important videos. And friends, if you have liked this, then please do share it with your friends also. And for details, please do check description to this video. Thank you so much. Bye bye. Take care. Stay blessed.